Well, earlier we covered high-tech and high-level trade meetings between South Korea and the United States and China and Israel. The United Nations says for the first time ever, direct investment out of developing economies has surpassed that of developed countries by about $130 billion. I talked to Parag Khanna, senior research fellow at the New America Foundation, about this trend and this recovery we're starting to see with global foreign direct investment.
So we have not seen global FDI recovery to the $2 trillion mark, but we have seen that the FDI coming out of emerging markets, which was only about 30 to 40% of that, has now recovered to that 2007, 2008 level. And what's more important is that of the FDI coming out of emerging markets, more than half of it is now going to other emerging markets. So what you're seeing is this cross-emerging market trade and investment flow from Latin America to Africa to Asia and so forth. So it's South-South is what we used to call it, but now it really is cross-growth market trade.
Let's look at the biggest country in the emerging markets, and that is China. It's talked about rebalancing its portfolio, but what's the reality of that, would you say?
I think China is really going to begin a major rebalancing of its portfolio. Let's just look at two issues. The first is that we're projecting outbound Chinese FDI to be about steady, about 200 billion per year over the next 7 to 8 years. So $2 trillion alone represented by China between now and 2020. Now, the composition of that is also slated to change. Just a couple of weeks ago at the Boao Forum in China, the chairman of the China Investment Corporation said, "We don't feel welcome in America. We're going to start rebalancing." Now, as you know, about half of their portfolio is held up in Western financial equities and so forth, and treasuries and so on. So you can imagine that they are now really going to push for diversification towards energy, resources, infrastructure, and other sectors in other emerging markets. We know that they're interested in, of course, in food, in minerals, and so forth. So longer-term infrastructure investment play is probably going to be a stronger component of Chinese FDI moving forward.
One thing that's abundantly clear now in 2013, it's a dog-eat-dog world, not only for tourism receipts, but also for foreign direct investment. And they're fighting hard, countries, particularly in the developing world, to get their share of that marketplace. Are there any standouts in your mind from your vantage point in Asia, standouts in Africa or Latin America that are doing it right, where they've calibrated the ability to bring in the FDI?
Well, the pie is really growing. So fortunately, you know, as we were saying earlier, we're seeing a rebound in global FDI and a rebound in emerging market inbound and outbound FDI. So yes, there's absolutely a very competitive landscape right now, which is very exciting, actually, because of the political stability that is now in place in a lot of regions in Asia and elsewhere. And even in North Africa, we're seeing some recovery of tourism visitors and so forth. The countries that stand out to me, though, are the ones that, some of which that we've been hearing about for quite a long time and are starting to deliver, like Indonesia. Huge increase in FDI going into Indonesia. And then the totally new frontier markets, if you will, such as Myanmar, right, where there's now a very steady interest in deepening investment there and really building the infrastructure and the economy. So I think that, you know, it is, of course, a world of opportunities, but there are some places that people are just starting to talk about, like Colombia and others, that actually have been quite stable for quite some time, and their markets have been performing well. It's just now that we have this very long-term, low growth prognosis for the West, you really do have to commit to those emerging markets.
Once again, Parag Khanna of the New America Foundation, looking at the trends of foreign direct investment now, going from emerging market to emerging market, trying to chase that growth.